Hi everyone, Don Singletary. Welcome to the Day Trading Micro Futures channel. And I get asked a lot. One of the most frequently asked questions I get is, how do I know which of the 4 Micro E-minis I should be trading? Well, I'm going to throw some screenshots up here and let you decide that for yourself. Now, I use the NASDAQ100, and as I've explained in previous videos, I do it because it's only $2 a point, so it's lower risk. And also, it's a very broad average. If you trade the DJIA, the Dow Jones Industrial Average, and the market can be down 50 to 80 points if Apple stock is off 5 for the day. So individual stocks with only 30 stocks in the Dow Jones Industrial Average, of course, carry a heavier weight. The NASDAQ 100 is I like because it's such a broad average and it contains all of the tech stocks too. Which you get a lot of news and reports on those that might be useful in your trading. It's very, very easy to see between the 4. They all correlate rather nicely, almost right on with each of them. The Russell 2K perhaps is a little less volatile, and that may be because it's an average. It's very broad with 2,000 stocks. And another question I get a lot is, which one is the most volatile or risky? And you can see the top 3, the DJIA, the S&P500, and the NASDAQ all vary about the same amount during the day. The least volatile, which I mentioned before, is the Russell 2K because it's a very broad index. If you're new to the channel, be sure and look for the 2 links below for the free playlist. The first one, a 4-part video series called Beginners, and the second one is MACD Winners, all about reading the trade signals that are going to help you make some money. Today, we're talking about exceptions to the rules. And by that, I mean avoiding deceptive trading signals that you might get at various times. Now, if you're new to the channel, you may not know this yet, but one of my MACD buy signals, the rule for that, it's a rule of thumb, and there are exceptions, as I'm going to show you now. I don't want you to be deceived by a good rule that works most of the time, but I can give you a tip on how not to take the bait. On this particular chart at the bottom, the rule of thumb is if both the lines, the red and the green, are above the 0 MACD line, and the green line is above the red line, that generates a buy signal. But in this case, you can see the green line is flattening out. The distance between the red and green lines is diminishing. They're getting closer together just as they both are above the 0 line. Now, this would not be a buy signal. And the reason is because those 2 lines look as if they may converge very soon, or at least they're getting closer together. It's a time when you're losing the upward momentum in the market, but you're also, by the rule of thumb rule, getting a buy signal. So in this case, avoid the buy signal. It's a deception. But wait, look closely at what happens in the next 5 minutes. The green line goes from horizontal line up to a 45-degree angle up. So now the green line's above the red line. Momentum is increasing because the distance between the 2 lines is increasing, and that's a definite buy signal. So I guess you could say my addendum to the rule of thumb is wait till that green line is up at a 45-degree angle, or at least rising much faster than the red line is, so you can make sure you have a good positive buy signal. It would have worked out okay this time, but many times it won't, and that green line will go back down, and you'll have a reversal, and you'll have a loss on the trade. If you want to be sure it's a definite buy signal, don't do it when that horizontal, when the green line is horizontal over the red line. Wait till it shows some upward momentum. As you can see, this would have worked out to be a nice little trade. We get that buy signal around 87.90, and we had a good upward momentum there for quite a while. And we got an exit signal when the green line again became horizontal and looks as though it's going to converge with the red line again. That means get out of the trade. We're long, so we sold and cleared the trade and made a nice profit of 45 points, about $90. And remember, what's the first rule? Protect your capital. That is why we're so careful on both entry and exit of all our trades. Okay, let's move on to the next example now. Brand new chart, brand new day. You see at 9:30 here, the market opens. Now remember the rules: a buy signal, red and green, both above the zero line and the green over the red with some momentum in an upward direction. And a sell signal would be both lines, red and green, below the zero line, and the green line would be below the red line, again with some momentum downward in this case. Where do you think the first signal is? It's a sell signal, and if you thought right about here, you are correct. Okay, now we're going to have some fun with this trade. Not fun, but entertainment, a chance to learn something here. Now, remember, the increments on the candlesticks are 5 minutes, so if you count over 1, 2, 3, 4 from the opening, that would put us at about 1050 when we get this sell signal at about 8700 for this NASDAQ100 Micro Emini. Now, 5 minutes later, we're somewhere right about here, and we have about a $40 to $45 profit 5 minutes later in the trade. We go another 5 minutes over, and we're going to go from maybe about $20 down to almost $60 profit during that 5 minute segment. And we see 5 minutes later, we're only 5, 10, 15 minutes into the trade, we're back out at even money. We get a cover or exit the trade signal right here, and we were up $40 to $60 at one time, and we gave it all back. And we really didn't have a good cover signal until where it is the green arrow marked. But what are we thinking? We're thinking, what the heck could I have done to be $40 to $60 ahead, and why did I let myself give it all back? Obviously, you want to think about either putting your finger on the mouse button so you can make an instant market entry to be able to cover. If you were up 40 and all of a sudden you're just up 20, you may want to hit the button and take the 20. Or any combination between you or I and somebody else, 10 different people are going to have 10 different results. That's why you can't have a mathematical formula that will tell you how to trade. It's just impossible. I'm sorry, it doesn't work. If somebody tries to sell you that formula, they're going to tell you the Tooth Fairy wrote it, Santa Claus signed it, and the Easter Bunny's going to deliver it. I'm sorry, it just doesn't exist. But you've got to think ahead. This is how you're learning these trades, and it's why I put this one up on the page here, because I'm a monitor, of course. I want you to see that you make decisions during that trade. It's not just the buy and just the sell signal. It's what happens in between and how you manage it. If you're $50, $60 up in 10 minutes, I wouldn't call it a successful trade if you give it all back. You've got to save at least half of it or some portion of it there. And there are some of you, and I wouldn't blame you, if you make $60 or $40 in 5 minutes, you're going to go click, you're out, and you've had a good day. And that's cool. That's fine. It's perfectly okay to do that. You'll have plenty of times to judge yourself in hindsight, the genius of hindsight, and you should never feel bad about that, because when you're trading, you do not have the genius of hindsight. But when you are ahead $40 to $60 after 5 minutes into a trade, what you do know is that you can save some of that before it all goes away. And you have to plan for that contingency as you go along. So this is a good example for that reason. Now I want to take the same chart and strip away all the symbols there and just look at the midday portion. Best hours to trade, first hours and last hours of each day session trading. This segment is 10:30 till about 12 or 12:30 Eastern time here. And we see the volume bars and we see a lull midday. In fact, the entire dollar range maximum potential is 140. If you're really, really good and lucky, you might be able to get half of that. So you're playing a lull in the midday here for a maximum profit of $70. This means that you've got to really control your losses if they do happen. And we get sell signals here, and then the market turns around. In both their cases, it would have been a very, very limited chance to make any money at all, and a good chance that you might lose a little bit by trying that. Another indication that there's a midday lull happening, you see over on the right-hand side, you see the +5 and -5 of the MACD bars. The market never exceeded +5 or -5 in either direction during the whole midday session. I would never tell you not to try and trade during the midday hours. There are some great opportunities that come along there. Just be aware that you could be into a volume lull and some trending up and down for a couple of hours there midday should you decide to trade that. Be careful with your stops, maybe a little more careful than you are normally. I really appreciate you tuning in to the Day Trading Micro Futures channel. It's a lot of fun to bring you this information. If you want to see more videos like this one, then just click the like button for the channel, and that tells me, yeah, I'd like to see some more of these. I would appreciate that very much. It helps me get material out there that's going to help you the most. Another thing, I post new videos here once or twice a week, and you'll always be notified when a new one's been put up if you will click the subscribe button down in the lower right of your screen. I'd appreciate that. If you're a beginner, here's a quick tip for you. Look on a chart during a lull and find the breakout points for resistance and support, and stick those numbers into the alarm in your software, and you can go about your business doing something else and just have it ring your cell phone when you need to go and check the market. Don't you dare get up in the morning and look at 9:30 Eastern time for the market to open and start trading without checking to make sure you're not going to make this $400 mistake. Look at the market. It's 9:30. It opens. It's going along. You get a terrifically strong sell signal after the market's been open 10 or 15 minutes, and everything seems to be going really well, and you're in the money right away on your short contract. And then, bam, at 10 o'clock, the market goes straight up by 200 points. At $2 a point, $400 in less than 5 minutes. You could have lost if you had not taken the following advice. Okay, at 9:50, you're up $150 on this fantastic trade, and you're thinking, I'm the smartest guy or lady on earth. 10 minutes later, at 5 minutes after 10, there was a Fed meeting at 10 o'clock that changed interest rates. The index, NASDAQ100 index, went up 200 points. That's $400. So you'd lose 250 of those dollars almost immediately, all because you didn't read the morning news and get a checkup on the news that was happening that day. All experienced traders know the Fed meetings are always scheduled in advance, and they don't do any very important trades on especially a market index right before a Fed meeting, because they can be full of surprises. That's what happened in this particular example, and the Dow shot up 500 or 600 points, and the NASDAQ100 Micro Emini shot up 200 points, or $400 against that opening short morning trade. That would be a horror story you do not want to relive for yourself. I get the morning squawk and a couple of other free services who will give you all the scheduled meetings of the Fed, presidential events, or major votes or treaty announcements and things like that. They're always in this pre-market or pre-opening newsletter that you can subscribe to for free. So this is a very vital point, and you should always check the news in the morning before you're going to trade. One easy way you can get almost all the information here on the Micro Futures channel is to check out my book, Day Trading Micro Futures for Income. It's all neatly organized with terminology, the psychology of trading, and you'll learn how to use the candlesticks and the MACD indicator. All the information's organized there so you can speed your learning curve and soon be making money for yourself with a learned skill that can last you the rest of your life. And I appreciate you subscribing to the channel and taking a look at the book. That's how I support the channel here. I hope every day is a payday for you. I'm Don Singletary, and thank you.